Recording is coming back on.
This meeting is being recorded.
Welcome back. So we just reviewed the quiz, all the answers. What were the toughest questions you saw on there? There were a bunch of folks that got 100, but not everybody. I think it was the average was 84, I think, on the quiz. I sent out the actual average and the number of A's and B's. So pretty dominant on the A's and B's front. But there were folks that didn't pass it either. So then it was the first quiz. We got a bunch of quizzes. Every module has a new quiz, or every week has a new quiz. So not to worry, not to sweat it out. There's plenty of opportunity for growth and learning. Chances are you got a feel for what the quizzes look like and the calculations. So any particular questions you have after reviewing the quiz, after going through that ROA exercise and the ROE, return on assets and return on equity, interpreting return as could be return, could be net income, could be earnings like earnings per share, could be net profit, also known as the bottom line. Revenues less expenses, we got our bottom line. Anything else on your mind as far as other questions you have?
Just a side question. So if it doesn't state in the directions to round, are we supposed to just assume to round to one decimal place if it comes out to that?
Yeah, the instructions should be pretty clear. If it's a percentage, you're probably going to go with a single decimal. But the answers themselves, or if they're dollars and cents, often the cents get dropped. And just want dollars because that's all you see on the financial statements anyways. Sometimes they'll be in millions, sometimes in billions, sometimes in thousands, and sometimes you get accurate numbers or exact numbers. So fair question. Don't worry about rounding unless you'll be told if there's anything else to worry about. And usually in the homework, they tell you 1 decimal, 2 decimals, whatever they want. And that's the numbers they want to see.
I mean, actually, it was one question from quiz 1. I just assumed to round up, but both of the answers, unrounded and rounded, were answer choices, at least for my quiz that I had.
Okay. So if chances are you're not going to, if you have exact answers and there's no rounding, that's probably the way to go, unless they state rounding. That's interesting. I'd be happy to take a look at your quiz individually if you want to take a look at that. But chances are, if you can get an exact answer and without rounding, you're better off. Actually, I'd like to do a quick round table. Give me one thing that you really like about the course and one thing you find challenging about the course. I want to find out where you're coming from, what's going well for you, and what you're saying is, this is confusing as heck. So think about that for a minute. And I'll put you on the spot. I guess I get to do that. Yes, and you can pass if you have to. Again, I'm not going to, this is not high pressure. I'm not here to pressure you into where we're going, but I would like to get your feedback and find out what's working and what may not be working. So if you don't mind sharing, that would be appreciated. Lee, go ahead. What you got?
The one thing I like about it is that I haven't touched this stuff in decades, and even though you use a lot of it in your daily life, just maybe not to the point of where we're at, balance the statement stuff, but you use it in your checkbook or shopping, doing whatever.
Sure.
But so I'm really enjoying that, but I really hate not having access to formulas. My memory is just garbage, so that's the one thing I don't like about it.
Okay, fair enough. I will share the strategy on that because I've had this conversation, and frankly, what I've done in the past, I've said, okay, you want a cheat sheet, you make it up, I'll approve it, and you can have for a final or something. Sometimes I'd get 0 people submitting it or just 1 person submitting for the value. The value is when you're reviewing this stuff, and I was talking to one of you earlier, you're going to be planning on using flashcards for some of these formulas. You're planning on triggering, figuring it out, having it register. Most of the ratios we use are fairly intuitive. Because if I say return on assets, you should be able to say, oh, I just put a slash in between the R and the A. So return over average assets. We talked about the need to use an average because the income statement's for a year and the balance sheet's at a point in time. So I got 2 points. So return on average, return on assets, return on equity. It's intuitively obvious. Earnings per share. Oh, I must have earnings or net income in the numerator and number of shares in the denominator. Oh, I got to take those average number of shares for the year. Okay, I get that because number of shares in January 1 is going to be different from December 31. Okay, so I've got my earnings or net income or net profit over average number of shares for the year. That's my earnings per share. So those are intuitive. I'll say intuitively obvious if you think about it. If you write the formula down, you write down the ratio, it should jump out at you. Oh, I just put a slash in between that and I'm good to go. My debt to asset ratio. Oh, that's a point in time. How heavily loaded am I with debt compared to my assets? Oh, that kind of makes sense. My debt to asset ratio, debt's in the numerator, my liabilities over assets. And I'm not taking any averages because that's just a point in time. They're both balance sheet accounts. So those are the formulas that you should be able to internalize. The ones that are going to get a little challenging, and there are 2 of them that I will grant you, and we'll talk more about them when we get into inventory and receivables. And we have inventory turns and receivable turns. And as I said, you need, and you know what? I'm going to talk about that for a minute now, because the more you see it, the more you get exposed to it, the better you'll probably feel about it. So I'm going to go in back to my whiteboard, and I'm going to go in and clear this out. And I'm going to talk about what does a inventory turnover ratio look like? Inventory turnover. There are 2 things that are going to go on there. One is inventory. That's the obvious one. And one is cost of goods sold. Now you look at that and you say, one of those is for my income statement and one of those is for my balance sheet. Oh, cool. I know one of those has to be averaged and one of them doesn't. Okay, so that's a starting point. We know we've got to average one of those. And we're going to say one of those in the numerator and one of those in the denominator. Well, I want the bigger number in my numerator. Well, which was going to be bigger? Well, inventory is going to change through the year. Inventory is going to go up, down, up, down, up, down, up, down, up, down, up, down. My cost of goods sold is going to keep increasing through the year. So which of those 2 numbers is a bigger number? It better be my cost of goods sold. So I'm going to do a cost of goods sold divided by average inventory. That's going to be the number, that's my inventory turnover. So if I sold $100,000 worth of stuff, or the cost of the stuff I sold was $100,000 and my average inventory was $20,000, I'd have 100 over 20. That'd be 5 times during the year my inventory turned over. That's all that says. This one is not as intuitive as a return on assets. But logically thinking it through, and we'll reinforce this when we get to this, this is a formula you should be able to understand, internalize, and have recall when you need it on a quiz, test, or you're talking to a superior subordinate. You're talking to an accounting somebody at your organization. This stuff should make sense. And as an MBA, none of this is beyond you. I guarantee you, this is stuff that you can internalize, you can make sense of. So that's why I don't really like the formulas. It's like calculators. Yeah, you get to use calculators. I'm all in favor of using calculators. But if you're in a position and someone says, I got 20% markup on a $15 item, are you going to want to pull out your calculator and say, 50, let's see, 20%, $15. Well, I can do this in my head, kind of. 2 times 15 is 30. Yeah, 3, just $3. Okay, so 20% markup on 15 is $3 more. It's $18. I can do that without a calculator. As an MBA, you should be able to do that without a calculator, or at least get a ballpark. You should be able to get to a point. You should be able to figure out what's 50% of something. And if you know what 50% of something is, you know what 5% of something is. I told you 200, what's 50% of 200? Oh, that's 100. What's 5% of 200? Oh, well, 50% is 100, move a decimal, that's 10. Nothing about fancy. You should be able to do 50% and 5%. You should be able to do 10% and 1%. Then you should be able to double that and do 2% and 20% in your head for most numbers. Now, if I told you $493 million, and you should be able just to round that up as a ballpark of 500 and work from there. So you want to get comfortable with the numbers because, and there's no reason to fear the numbers. These are numbers you're going to be working with the rest of your personal and professional. Lee, you brought up a good point. Balance your checkbook. You go shopping and you walk in the door and, you know, I got a military discount at Lowe's. Cool, 10%, which kind of makes up for the sales taxes, bottom line. Both knows that. But bottom line, you're looking at that, you're saying, okay, I can get a ballpark. Oh, they got 20% off. I get 50% off. I'm over at Belk's. Cool, I can do 50% off. Nice. I got to add the tax back. Okay, I get that too. And that ballpark 10% taxes. Okay, say 8%, whatever it might be. But you can ballpark it and come up with pretty reasonable numbers. But you're going to do this in business every day. You're going to analyze numbers. Numbers are going to get thrown at you. And you don't need to put them on a spreadsheet and get it down to the tenth of a percent. Often enough, you can ballpark this enough to say, okay, I need 150 bucks. I don't need 200, but I need 150. Do I have enough? And you're doing the analysis. Now you can get down, well, it's actually $142.73, but you just ballparked it at 150 and you say, yeah, we're in good shape. So numbers are your friends and something to practice. And to have this ballpark math, once you get past the math, yeah, accounting's four function math, we're good to go. All right. So Lee, you're off the hook. Who else has a good, the bad, the ugly? I always thought two of those were negatives and one of those were positive. But okay, good and bad. Lindsay, you're on.
Okay, I have to turn up the volume for a minute.
Okay.
So I tried to take this course as my first course when I started the program. I'm so not an accounting person. It was with somebody else, you know. And I do feel that now that I'm taking it again towards the end of the program, I have a much better understanding of the concepts because I've gone through other courses where some of these things have been introduced. So that's been good. I have a better understanding of what a balance sheet is versus a income statement.
Cool.
The only thing that trips me up, and I guess this kind of does tie into formulas, I'll have a formula memorized, but then I'll see a problem where it's, you know, just say return on assets, but it doesn't just give you the two components. Like you have to calculate something. And sometimes that's kind of challenging. Like, oh, what do you have to subtract from what or add to this to get net income? So it's like formulas within formulas that kind of trips me up.
I get it. That makes a lot of sense though, and I appreciate your share. I will point out though, you as a manager, you're sitting at your desk. Someone say, you know, you say, I'm trying to do an analysis, get a ratio here. Are you going to have a balance sheet that shows you the two numbers you need? Or an income statement that shows you the three numbers or whatever you're calculating? Or are you going to have to go to these statements and say, oh, okay, I need this number, and this number, and I need to make a calculation? What's going to happen at your desktop?
Are you saying like, I'm sorry, I don't understand what you're asking.
Okay, so the question is, you're a manager and you're getting asked a question. Your boss comes in and said, I need you to tell me, well, what's my return on assets? And you're going to say, okay, well, I've got my net income over here and I got my average assets over here. I'm going to just combine those and be done with it. Or you're going to have to go to your financial statements and say, oh, I need to figure out what the return is. There it is, bottom line of my income statement. Okay, I'll pull that number. Oh yeah, average assets. I got to go look at my balance sheet. Same thing. You're going to have a report on your desk of inventory. It's going to be this thick, and you're going to have to answer some questions about inventory. And you say, I'm not an accountant, but I might be a marketer or a salesperson. I might be a manager. I want to know my inventory. I'm going to have to extract information from this report. You're not given two numbers and say calculate. You're given a pile of data and you're saying extract what you need and give me some numbers and make a judgment, make an analysis. So the point is, being able to discern what you need is part of the art. So you're going to have to be understanding saying, and yeah, the quiz gave you average assets, right?
Mhm.
But there were some other things that you had, okay, I had 5 numbers and I only needed 2 of them. The art is which 2? So you need to understand and have enough of an understanding, because you're not going to have a cheat sheet. I tell you, if you have a formula sheet, you will lose it within 24 hours of taking a final, okay? It's not, you're not going to carry that with you in your back pocket. You're not going to have that in the 3-ring binder behind your desk. You need to internalize some of these numbers and maybe review them. I mean, I had to do the same thing. I was talking and they were saying, okay, here's some accounting concepts. I had to go through, we're doing leases. And I had to go through and review the 5 rules associated with leases. And how do you calculate, 75% of this, economic life, useful life, how many years, whatever. I wanted to make sure to review the rules. But once I reviewed the rules, I said, yeah, I had internalized those. When I learned it, I went back to it and said, okay, I got these rules down now. Let me go apply it. Let me go get the numbers I need, because there's a whole stack of numbers that was given. And I need to extract the numbers that are useful to make the calculation, to make the determination. So as an MBA, you're going to come out here saying, I've got some tools in my toolbox. This is your toolbox. And if you have to have a cheat sheet, a crib sheet that's going to have formulas on it, that you will not be as effective than if you can internalize some of these numbers and make sense and understand them. That's why I went through the review on assets, return on assets, return on equity, and asked you which is a bigger number. I asked you that question because logically you could say, well, if my equity is a smaller number because I'm borrowing a whole bunch of money, my return is going to be a whole bunch bigger. But until you see that, we did the walkthrough. We said, okay, here's $100 in assets and 25 in equity. And I made 25 in net income. My return on assets was 25%. My return on equity was 100%. Oh, 100% is bigger than 25%. Again, it takes some practice to internalize these numbers, to make sense of these numbers, but you will be asked these numbers. We'll get over talking to bonds. And I'll say, okay, the interest rate rises, the market interest rate rises. And I'll ask the question, does the price of the bond go up or down? And when, again, I'm previewing. I like to preview things so that next time you see this, you might internalize a little more. But the price, if the interest rate goes up, the bond I hold in my hand is worth less. So the price of that bond's going down. $1 million bond is not necessarily worth $1 million. It's worth $1 million. 10 years from now, I'll get $1 million and I get 5% every 6 months. 10% bond, every 6 months I get paid. So what's the value of that bond? We'll talk more about that later. But think about, if you understand that interest rates rise and it makes the bond I'm holding less desirable, logically, price is going to go down. People are not going to be willing to pay as much for a 5% bond as they would for 7% bond. If I have a 5% bond, my bond went down. Bonds go, but the bond rates of interest go up, value of bonds go down. And that's the marketplace. So equities, bonds, we'll talk more about that when we get to that point. But all I'm saying is, you're here in a program to learn and ultimately internalize. Because if you don't internalize some of this stuff, you're going to get asked questions, and it's not going to be a good reflection on FMU or you, because this is stuff that is logical the more you think about it. That's why first module, we're doing return on assets. Second module, we're doing return on assets. Third module will now start return on assets, return on equity. We'll start some other returns, and we'll start doing some other analyses. But these are things that we will make sure you do internalize. And I'm glad, Lindsay, you brought the point. You know what? My first course was accounting. It was a bear. I get to see you coming back for round 2. I'm glad you're here, but you're right. You picked up a lot more during your tenure in the program, saying, okay, now I'm later in my program, I have a better appreciation, understanding for some of these financial statement stuff, balance sheet, income statement. And once you graduate, and then you combine it with the economics, you combine it with the marketing, you combine it with the management and strategic planning, and the whole bundle is now a package that makes you a better manager, better business person, and ready to springboard into other areas. And then 5 years, 10 years from now, when you go on to do some financial analysis, it'll be a review. And you'll say, oh yeah, I understood it then. Dr. Scott made me memorize these formulas then. I forgot them promptly. Okay, and that's okay. But then the next time around, it's easier to internalize and say, oh, I actually, you won't admit it, but you might say, I'm glad I memorized those formulas at the time. I practiced them, I internalized them. So the next time I got exposed to them, or I'm helping my kids who are studying accounting and business, or I'm talking to colleagues who are trying to figure out an evaluation from the CEO, you can better understand and be in a better position. Because if I give you a cheat sheet or crib sheet, I'm not saying it's lazy.
When that number rang, that's
I am saying it's an easier way, but it will not help you as much as if you can internalize some of this stuff. Does that make sense?
Yeah.
Okay, I'm not trying to create, well, I guess I am trying to create more work for you, but the more work is going to have a payoff. And you don't know which ratios you're going to need, which data you need. You got a book on the table with all kinds of numbers. Which 3 numbers out of 25 do you need? You're going to have a dashboard that's going to show you, oh, how's the business doing? How's my division doing? How's my department doing? You're going to get a budget from whoever. You're going to have to create a budget from whoever. You're going to need to understand some of the relationships, and having that piece of paper that says, oh, I got the formulas. That's a crutch you don't need, frankly, because this stuff can be understood. All right, 2 down, 4 to go.
I'll go next. I will say, so I'm in the same boat as Lindsay. I have taken this course before, and so back for round 2. But I will say, starting off the course with like the modules and your lectures and the way that it's breaking everything down in terms of all the different components of the balance sheet and the income statement and all the different financial statements, and just kind of having that base of foundation and going through everything like the course has been so far, I've found that helpful.
Cool.
Yes. And I will say, probably as the hard part, I will say probably the formulas a little bit. And then one thing that was kind of tricky for me that I'm still trying to make sense of. So in the homework for module 2, the different problems that you had to, depending on what the scenario was, say if the amount was increasing or decreasing, that was kind of hard for me. Because like in some of them in my mind, I would say, well, you got paid in this department. So I don't know. Some of those I'm just still trying to kind of.
By the way, we'll do a little deeper dive on module 2 tomorrow night, but bring some specific problems or exercises or questions from the homework that you want to talk a little bit more about. Because that's, believe me, you're not the only one.
Mm-hmm.
If you have questions, and I know the last time the problem that was brought up might have been over the head of some, but it also might have been under the head of some, but bring in your questions, because then we can address what's confusing to you, which I guarantee you, you're not alone.
For
So
sure.
please bring those in, because that's most helpful for our review session. So I want to also go, there were some errors on the spreadsheet that you guys posted from Saturday, which we'll talk about tomorrow night as well. But I want to make sure, because just because it's on the spreadsheet doesn't mean it's right. So we'll take a look at some of that stuff as we go and do calculations, because there's a logic to this too. I also want you to get a feel, not that, okay, you do the numbers and you make calculation and you come up with 12% and you put that down because the spreadsheet says 12%. And then you go on and I say, okay, is 12% logical? Did anybody ask that question? And I'll give you a sneak preview. We had a retailer that has 12% net income percentage. Well, if Walmart's at 2.4%, is it logical that we can have a 12% net income percentage? Is it logical that a manufacturer can have a 28% return? Short answer is 2 words. It depends, but depends on what? Well, it depends on the industry. If you're making cars, I would conjecture 22 or 24% net income percentage is illogical. It's not happening. You get a number like that, you should be able to look at that and say, that's a little strange. There's got to be a reason for that. Maybe there was adjustment to the tax rates. Maybe there was you looked at the details of an income statement and you can say, oh, this number, they sold off a division and made a whole bunch of money. Okay, they spun off a division and made a whole bunch of money. Or this is from operations. No, this is something's wrong here. They can't make that much money or that little. We talked about Tesla losing money for 19 years. They lost money. But now I have an analysis on the spreadsheet that Tesla made money last year, and they made a bunch, and that's cool. But for 19 years, they were losing money. There's a whole story behind that. In accounting, we're storytellers. We're looking at the numbers, we're analyzing, we're thinking, and we're projecting. We look at historical, and then we say, well, what's the future gonna hold? But the historical is important to get a perspective on where we're at, what we're doing. Amazon didn't make money for 7-8 years. Say Amazon, they didn't make money. They lost a whole bunch of money, but they didn't care. They had investors who didn't care. Well, they cared, but not as much as getting market share. That was their mission. That was their role. That was their direction. Accounting tells a story. Accounting can tell all kinds of stories, good, bad, or ugly, but it also helps you understand how a business works. And you're going to look at financials from the places you work, and you're going to say, I confess, I looked at FMU's financials before I came to work here. They were much stronger than some of the other schools I was considering. It impacted my decision that I had confidence and comfort in the strength of the institution and what goes on here. And it gave me, and reinforced, there's a whole bunch of reasons I came here, and I'm glad I did. But I'm glad you're here too, by the way. But to get the idea, the environment in different places has different things to consider, different things to think about. Different businesses have different numbers to track. I mean, in retail, you might have dollars per square foot. In high tech, you might have dollars per employee as revenue. You're looking at a hotel, you're looking at occupancy, hospitals, occupancy rates, dollars per room. You're looking at different factors depending on the industry. So we're getting the financial statements in order. And I like, Kate, how you addressed, you like the idea of the terminology. Yeah, we're getting the terms because accounting is a language. You said the language of business.
For sure.
All right, 4 down, 2 to go. Actually, we lost one, but that's okay. Any other feedback, good or bad? Welcome to feedback.
Dr. Scott, I'm gonna have to hop off, but I'll see you on Wednesday.
See you tomorrow night. Thank you.
I've got to scoot off for a meeting as well, but I will see you tomorrow.
I look forward to it.
Thank you for doing this.
Yes,
You're very
thank
welcome. My pleasure. All right. Leah, Volk, your thoughts?
My feedback is, sorry, I've been hopping back and forth between 2 contractors and 2 different meetings going on at the same time.
Life gets in the way. I get it.
Yeah. My feedback is so far, I love all the material that's and all the different platforms. You're hitting every possible way of getting the material into us, whether it's a auditorial, it's visual, whether it's kinesthetic, you're hitting every possible avenue there, and that's great. My problem for me is I don't see the bigger picture. I see the 5-meter target. I can see the 10-meter target. I don't see what's there. What is my ultimate goal other than this piece of paper that says MBA? But I need in each class, like I understand what I'm developing for in economics. I understood in the strategic planning class, the end of the project was the class. Dr. Hari's class, understanding analytics. I got it. Understanding accounting? Yeah, no, I got an uncle that's a CPA, makes buku money, and he's been doing it for about 40, 50 years. And yeah, I don't see the end of the target.
Let me ask you 2 questions. Well, good. So this is back to that why. Why are we studying accounting? Do you make investments at all?
Yes,
Okay. Have you ever read the financial statements of any of the companies you've invested in?
yes.
So in this class, we will better understand the financials. So you can read and you can have a deeper dive and have a better understanding. Because you're going to do analysis, ratios. I mean, financial analysis is universal in the sense of accounting and looking at financial statements. There are no guarantees. You know, I did great last year. I'm doing terrible this year. That's not a guarantee. But understanding where these numbers are coming from and going, yeah, personal investing as well as business investing. Whether you have a for-profit or nonprofit, you're probably going to put some spare cash somewhere, maybe marketable securities, some other investments. You might buy a competitor or have a competitor invest in you, or a customer the same way. You may invest in a customer or they may invest in you. We got to understand where those numbers are coming from. And the big picture is the financials, giving us a perspective and telling our story. Our final project, we'll have more details talking about, all right, analysis. And the question is, would I invest in this company? Why would I invest in this company? Well, they got a lot of cash. Well, that's probably not a great reason because cash can come in and cash can go out. They might be a great acquisition target. They might be a good takeover target because they have cash, but they may be not doing enough business because they're holding on to cash. And you shouldn't be holding on to cash, either give it back to the stockholders or invest in something. So if you're holding on to the cash to invest in something, and that's more of a finance thing, that's a good thing to do because I'm expanding, I'm going global, I'm buying more equipment, I'm investing in more machines, real estate, and people, whatever it might be. Those are the things you are analyzing and trying to understand. So I guess I'm trying to get across the big picture is, yeah, we're building the foundation, the language of business, and through that growth, we're going to have an understanding in a bigger picture of how all this fits together. So I'm hearing you saying, I'm not sure why we're doing all this, even though I'm doing it. But I think you do understand, and you've been around the block once or twice. You realize that this knowledge, this information, and, you know, there's this power in knowledge, and having this knowledge, being able to talk to an accountant. I'm not going to make anybody here a CPA, unless they're already a CPA. That's great, but you're going to be talking to accountants the rest of your business career and probably personal career. You should be able to understand what the accountant says to you and how to respond based on what the feedback they give you or the questions they ask of you. So you should be able to say, oh, okay, so this is how this affects. Okay, I see how on the return. I see long-term what the impact might be. That's where we're coming. Does that make some sense?
Gotcha, makes sense. Like I said, I'm just used to seeing the 25 to 50, the 100 to 350. I'm like, all right, where are we? We're building here. I got it, but where are we going with it?
I mean, you could do the 100-yard dash and you could do the 5K, but if you're doing the marathon, you're going to train differently and you're going to think differently.
Gotcha. All right.
Fair enough.
Dr. Dell, thank you again for hosting this. And yes,
You're welcome.
Monday's a much better day, especially when they're not on a holiday.
Yeah, thank you.
The whole world wants to open up. So see you guys later, and thanks again.
Appreciate it. Leah, you got a shot. You want to take it?
Okay. I guess what I like about the course is I think part of it's because like right now we're still talking about things like balance sheets and income statements and the kind of things that are covered in kind of introductory accounting courses.
Yep.
And so I think it makes it easier to relearn since I did take accounting courses during my undergrad.
Okay.
So it's sort of that. It's also sort of relearning, and
So it's a good review, is what I'm hearing.
yeah, and I like having the extra resources that you have on Blackboard, like the lectures from the business courses online and things like that. I think as far as what I find difficult, I think it's like what other people said. It's just like being able to know the formulas and kind of be able to kind of think through them logically.
Mhm. Yeah, that is the art. You actually hit the nail on the head. Understanding how, when, and where to apply these things. First of all, what the formulas are, and then how do they fit in the scheme of things. So I appreciate your appreciation of that. But since we're building on that foundation, getting the terms down, getting the relationships between these terms and between all financial statements, and then the ratios and doing the deeper dive, that's going to carry a long way in terms of understanding long-term. And you're going to graduate you're gonna walk away with an MBA, you're gonna have a good base of financial and marketing and economics and management and the whole 9 yards and the data analytics. These are all things that will complement and help you succeed. So appreciate that feedback. Insight. Anything you'd like to see different, just out of, based on what you're seeing so far? And Lee, you're welcome to provide input as well.
What was that last question, sir?
Anything else, any other input, anything else you'd like to see, needs, different, that you would like more of, less of, as you're seeing it here? Because you're right, there's a lot of resources, there's a lot of tools that you can take advantage of. Leah was talking about, but I want to see if there's anything else that you feel you'd like to see more of or less of, or have, or overall in general would appreciate.
Well, I'm not gonna lie. You know, I'm not in complete overload from everything that's been presented in this course. I mean, with all the stuff encompassing everything, it's a lot more than I've had in the other classes. You know, most have been, I won't say more broad, but it's God, how do I want to say this?
It's okay, take your time.
Well, you know, like just I'll go back to say the formula thing. I asked formulas for a reason, right? I mean, I got my own personal reason that I use them. A lot of times I don't need formulas, depending on what it is, right? But at the end of the day, if I can look at a formula and help myself work through a problem that I have, I'm gonna get it right most likely. And I would rather have to work through that problem now and build that muscle memory on a quiz or a test and actually pass and have it help commit to the memory that way versus not getting it right and then failing the course, having to take it again, right? Something like that. But yeah, I work very well in a visual sense, and a lot of things that I commit to memory is either A, it's pretty simple and I can pick it up just like that, or you know, I'll commit it to memory through repetition, right? And understanding, you know, which is we get a lot of in here. You see a lot of different terms that mean the same thing, which is where you say the accountants earn their big bucks. But at the end of the day, too, those are great things to know. But for me, if I know, hey, here's income, instead of being tricked by something in a question I may not remember, excuse me, lunch didn't go down right, or you know, a problem, even though I know how to figure something or how to do it, I get fooled by, you know, word association or something. That might be something that would bother me. But I think the way you're presenting it, it's pretty good. I mean, you're associating all the words together and saying, hey, this means this means that. You're presenting a lot of information, yes, which is good. I just don't know in my schedule. I'm committing most of my time now to this course, which is fine. You know, it's normally that way. I've got 2 classes every semester. One normally gets the lion's share of my time.
I get it.
But with work and everything else, it takes away from what I really think I need to based on the information I'm getting. And maybe I'm overthinking it. I don't know.
I will say, okay, thank you for sharing, because I understand, I mean, and we're all grade conscious, by the way, and I want you to get A's too, and I want you to succeed. But the real important of this foundation, of building a solid foundation, is not to have, you know, well, I get the exact answer right, which is important, but understanding the concepts behind it. If I'm building a brick house and I start with foundation or pyramid, and I start with some bricks that have cracks in them, my pyramid, they may not last so long. But if I can get a firm foundation, understand the terms, understand some of these formulas of where they're at, rather than, you know, I got a sheet of 5 formulas. And I, I could do 5, and that's not a bad idea. Maybe I'll come up with a cheat sheet of formulas to learn, which is why I suggest the PowerPoints, because they usually do a pretty good job. But I mean, like the retained earnings statement and the ROA, ROE, those are some basics that if you understand those, you can go far. I'll give you an example. When I say, okay, we're going on to Edgar and we're looking for an income statement. And it says statement of operations. It says statement of comprehensive income, balance sheet parenthetical. 9 times out of 10 for the unaccustomed, the not knowledgeable person in accounting will say, oh, income statement. There we go, comprehensive income. Got it. Thank you. And you go to the comprehensive income statement and it starts with net income. And then it talks about derivatives. And then it talks about foreign currency translations. And then it talks about pension funds. And you start saying, what's on an income statement anyways? Net income's on an income statement, but that's usually at the bottom. I got 2 other things on an income statement. I got revenues and expenses. I'm not seeing revenues and expenses. I must be in the wrong place. So then you go to the parenthetical balance sheet. You say, oh, that's got assets, liabilities, equity. Oh, I know that's a balance sheet. Statement of operations. Oh, well, that starts with sales. Sales, that's revenues. And then it shows me cost of goods sold. Oh, yeah, that's cost of goods sold or cost of sales. That's an expense. And then I got SG&A, selling, general, administrative. Okay, I got the right statement. And from that statement, I need to get that net income thing that we were talking about because I'm trying to calculate my return on assets. Oh, my net income, bottom line. I'm on my income statement. I'm good to go. So going through that exercise the first time, it's a pain in the butt. You said, why can't the comprehensive income statement be my income statement? All right, because it means different things. But if you know statement of operations or statement of earnings or statement of profit and loss or income statement are all terms for the same thing, it just happens to have revenues and expenses, you're covered. You will have a better idea than saying, okay, I need to, because if I told you this, go to the income statement, get the net income, and then calculate. Take average assets from your balance sheet and go. You're going to come back to me and say, where do I find my net income? I can't, which one? Oh, where do I find my asset? I got current assets, total current assets. But if you understand that we need total all assets, including current assets, or if I do a debt to asset ratio, I need all my liabilities, not just my current liabilities. If you have that concept down, you're going to be much further ahead, A, in this class, and B, past this class. And then you take econ and say, yeah, I know my debt ratio, my debt to equity ratio, total liabilities over total equity. Good. Point in time, I got this covered. But you need to internalize that. It does take some effort rather than reading the formula. I'll tell you, having a crib sheet is a crutch. And you might say, it's going to help me get an A in this class. And it might not, because all of a sudden you're going to start saying, well, where do I get this number? And you need to logically be able to understand to solve some of these problems. Is that making sense?
Oh, it makes perfect sense. And you'll never hear me say, all I'm looking for is an A. I'd much rather have a C- and understand the material than an A and walk out and just say I got a piece of paper. That's not what it's about. For me, it's literally, hey, if I get there, I understand what this means for the most part, but man, I'm missing something. I'm not seeing an answer that I should. What am I missing? That's where having that, because fact is having a cheat sheet, just like I say, it's going to be a crutch in some ways. Because hey, it's going to take time for me to have to find it. That's one thing. But the thing is, when I do have that one thing, and again, I'm not just advocating for a cheat. I'm just saying, that's kills me, and it's been that way for a few years now.
I get it, and I appreciate the input, and I can see both sides of it. So but as far as the opportunity to really internalize stuff, and as we all get older, sometimes things get slower, or sometimes things get bigger picture. So we are better able to understand and internalize. Like we were just talking earlier, when it was said, well, I took this as my first course and now I'm taking it as a later course. I'm doing much better later because I've got some of the stuff. It's not that Dr. Scott's the great teacher, it's that I'm a better student. I'm in a better place. I'm in a better position to have seen some of this stuff and understand it better and where it's going to fit into long-term of what I need once I get the MBA, once I progress in whatever other directions I choose. So I think the opportunities here, we're trying to get that language firm. We're trying to get that foundation built. And once we can do that, I think we'll be in all better shape to springboard off of that in a big way. So I appreciate the input. Any other thoughts before we call it a day and come back together tomorrow?
No, sir, I'm good.
Glad to hear that. Lee, thank you. Leah, thank you as well. Glad you're here and appreciate your involvement and your commitment to making a difference in your own lives as well as in this class. So if you have anything you need, don't hesitate to reach out.
All right. Thank you.
You're very welcome. Take good care.
Bye.
Bye-bye.